Assalamualaikum, my name is Nurizatul Husna binti Mat Rozalman, metric number 21613. Now I'm going to explain briefly on the background of Carillion PLC. Carillion PLC was a British international construction and facilities management services firm with headquarters in Wolverhampton, United Kingdom, prior to its liquidation, which was commenced in January 2018 and was officially the largest ever trading liquidation in the UK. Carillion was founded in July 1999 after the separation of Tarmac, and it became the second largest construction firm in the United Kingdom through a series of acquisitions, and was listed on the London Stock Exchange and had over 14,000 employees in 2016. Moving on to the fraud cases of Carillion, the first one is pension deficit in relation to poor dividend policies. Carillion's dividend were an important component of the company's overall financial performance, constituting around 64% of the company's declared earnings of 124 million in 2016. In addition, during the past few years, Carillion has taken great pleasure in increasing the dividends that it pays out to its owners. This suggested that the upper level management decided to give dividends to shareholders rather than using the funds to fulfill its pension commitments to former employees. Next is utilizing the reverse factoring technique. The practice of reverse factoring, which is also known as a hidden debt loophole, was being utilized by Carillion at the time. Because of this technique, Carillion appeared to be in a better health than it was actually before. For example, Carillion reported having an operating cash flow of 115 million in 2016, while also reporting an operating profit of 145 million. This combination resulted in a cash conversion ratio that was considered to be appropriate. The third one is aggressive revenue recognition practices. Over £500 million worth of Carillion resources were put to use in the company's supply chain financing program. The company then utilized aggressive accounting processes in order to efficiently falsify financial statements in order to improve the cash flow conversion ratio, increase net cash while simultaneously decreasing debt, and boost cash generated from operation. This issue was brought about by the reverse factoring arrangement that Carillion had in place to fund cash flow, and as a result, it had an effect on the calculating of cash conversion.
Assalamualaikum, my name is Nurul Syafiqah binti Mat Hisham, my metric number 280265. The fourth fraud case of Carillion is disproportionate incentive to maintain the goodwill value in account. Based on previous annual report, it is clear that Carillion balance sheet has been significantly bolstered by goodwill. For example, in 2016, the business recognized goodwill of 1.6 billion British pound sterling, which was more than twice of the net asset for 730 million British pound sterling, and accounted for nearly 35% of gross asset. Carillion obtained goodwill through acquisition, which is the difference between the book value of the firm acquired and the amount paid. This was supposed to represent the potential earning of company Carillion had bought in the past years. Because goodwill is so important on the balance sheet, any serious thief would have significant impact on reported performance. As a result, it may argue that the excessive motivation to keep the value of goodwill in account is concerning. Furthermore, the IFRS standard required that the assumption used in assessing goodwill be submitted to yearly assessment to determine if they are impaired or have lost value. Carillion never declared an impairment in its yearly account, implying the management was convinced that the amount paid for each purchase was justified by ongoing economic gain it anticipated for them. Carillion, on the other hand, struggled to explain some of its purchase. Carillion, for example, reported that 330 million British pound sterling in goodwill when it bought AGA in 2011. Nonetheless, despite the acquisition was miscalculation, the sum remained steady after 5 years of straight losses. Overall, despite the high value of goodwill, cash flow was much less than the amount represented by the net income. Next, the fifth fraud case of Carillion is low margin contract combined with excessive debt. Carillion business model was based on tendering low margin to secure contract and then reporting profit in its book using the large amount of debt. Furthermore, the firm was in an industry with resulting margin. Low margin contracts are prone to risk since tiny change in income and cost can readily affect the total profitability of the individual contract. Furthermore, the poor margin will have knock-on impact across the supply chain. In the previous 8 years, Carillion's operating margin was between 1 to 4%, while its profit margin was between 2 to 3%. It is important to highlight that the Carillion frequently engaged in the long-term contract and that the old IFRS account regulation offer corporation choice over whether to disclose the contract revenue. Carillion financial record provide little information about how the business accounted for long-term contract.
Assalamualaikum warahmatullahi wabarakatuh. My name is Zati Saya binti Muhammad Iskandar, metric number 280056. Today I want to talk about how and what auditor do. Firstly, is auditor should report error error and fraud. As an auditor, one job is to examine a company financial statement to see if they are in order and fair, and to do so in accordance with the financial reporting standards. In order to increase the authenticity and trust of one entity financial statement information and data, as a result, auditors are required to ensure that any error or fraud committed by an entity is detected, and if there are, the auditor should discuss the situation professionally. The second point is professional judgment. Auditor must use professional judgment to determine whether a judgment is implying fraud or error, as well as whether it is consistent with the applicable financial reporting statement. Professional skepticism is one of the components for professional judgment, and is a key skill for an auditor. There are 4 professional judgment principles in total. The first is knowledge gathering and analysis, where professional auditing of a judgment is only possible if all relevant data is gathered and processed. The second step is to assess accounting and auditing guidance, which can only be done in that context using an appropriate accounting framework, standard, and the other relevant information, as well as auditing standard and recommendation. The principle of procedure for evaluating and questioning an entity is third principle. Finally, must all be well documented. The role of auditor consists 5 important points, which is the first role is form an opinion regarding the firm, accounting, other record, and register. The second is in charge of delivering an informed assessment of the current financial situation facing their organization account. The third is make certain that all of the accounting paperwork and related record in good condition and do not include any errors. Next is disclosure of fraudulent, and the last, the director of a company held liable for the creation and honest presentation of financial statement.
Next, I'm going to present how and what auditors do for reasonable assurance. An auditor must gather a sufficient appropriate audit evidence to reduce audit risk to an acceptable level to achieve reasonable assurance. In this case, Caroline auditor, which is KPMG, has apologized for the misconduct and mislead to the UK's accounting regulator after the former auditor accused for the forgery related to the audit. So this means that in the year of Caroline scandal, KPMG does not achieve the reasonable assurance in doing the audit. So KPMG supposed to, which their as an auditor supposed to plan and conduct the audit in order to obtain the reasonable assurance that the financial statements are free from material misstatement, either due to error or fraud. Next is the involvement of auditor. There are 2, which is internal auditor and external auditor. The internal auditor for Caroline is Deloitte and EY. So in this case, they do not recognize any substantial flaw in its governance, risk management, and internal control of Caroline, which does not not make sense, because there are many red flags in Caroline's financial activities that we can see in the Caroline scandal year of Caroline scandal. So this shown that their internal auditor does not have a high level of integrity and strong ethical standard of an internal auditor. So internal auditor supposed to provide a fair and accurate review of governance process, risk management, and internal control of Caroline. Next is external auditor. An external auditor examine accounting record of client and give an opinion on whether financial statement in accordance to the relevant accounting standard such as GAAP and IFRS. In this case, KPMG is the external auditor of Caroline's audit report did not qualify the audit report of Caroline despite all red flags in their financial activity, which led to the failure of Carillion. A report that received an unqualified opinion is essentially a clean report. So KPMG are supposed to satisfied with the financial reporting of Carillion if they not disqualify the audit report. Although it's the kind of assessment most company anticipate from an independent auditor, and it's informs shareholder that the financial information they have been given is accurate and fair. KPMG should have been more sensitive of all red flags in Carillion financial activities.
Assalamualaikum warahmatullahi wabarakatuh. My name is Christina Umara binti Mansuni, matrix number 280740. I will proceed to the next part, which is the effect of Carillion scandal to the auditor. As for in this part, I already separate it into two parts, which is in general and for the auditor itself. As for in general, the effect has three, which is the first one is Carillion collapse, and the second one is uncertainty about the catering services, which is for the school and others. As for the third effect, which is the last one in general, is government flaws its books. As for the effect for the auditors itself, I will explain it further in the next part. The first effect to the auditor is negligence claim on the company. On suspicion of carelessness in an audit of Carillion Company, KPMG was sued by UK government bankruptcy practitioners for 250 million pounds. It is because KPMG's financial accounts were not compensated if they were discovered to be falsified as a result of the audit. The misrepresentation about dividend payment is particularly egregious, given that the corporation gave out more dividends than it generated in the 5 years from 2012 to 2016, regardless of whether KPMG was responsible in accounting for goodwill, which is the future value of the purchased business. The proposed procedures failed to discover misstatements in the accounting of income and liabilities from building contracts. Next is audit process has failed, where only 9% of company secretaries surveyed believe that the audit process has improved. Over half, which is 51% of respondents, believe that the industry has failed to advance, with many believing that little has been learned from the recession. ICSA, the Governance Institute and recruitment expert, the core partnership performed the pool. The third effect is direct intense scrutiny, where the British government has decided to revise its auditing standards in response to a number of auditing failures and investigations into those failures. In spite of their assertion that the precise reasons for KPMG's errors remain unclear pending further information, the claimants stated that the accounting firms failed to keep its independence from Carillion. And the last effect is audit partner welcome and offered Carillion hospitality regularly. In particular, the lead audit partner at the time, Peter Meehan, repeatedly accepted hospitality from and offered hospitality to Carillion, and its senior management failed to respect the proper boundaries of the auditor or client relationship, and offered assistance to the executive management in getting figures past the audit committee, according to the report.
In conclusion, fraud cases happen to Carillion are due to many external and internal factors that lead to collapse of Carillion. From this statement, it showed that the auditor were not following the principles, which are integrity, fair presentation, and independent. As auditor, they should make a professional judgment in order to determine whether it implies fraud or error. Next, auditor need to gather sufficient appropriate audit evidence to reduce audit risk to an acceptable level to achieve reasonable assurance. So, as the auditor, they need to have professional skepticism and use rational method to reliable auditing conclusion by using the efficient auditing process.